Hello everyone and welcome to my channel. So in today's video, I will do a market recap for the previous week and I will be focusing on the mistakes that I made during this week that led me to lose a 2% on my challenge account. So first of all, I want to emphasize and I want to acknowledge that the problem is not in my strategy. The problem is in my psychology and in my discipline. This is the problem that I'm facing right now. But while I'm trying to work on this problem, I'm also trying to have more confluence going into the market and more experience. Now, what I did is I changed the way I represent my checklist. So, for example, if I have a daily bias from the previous day analysis, anticipating the next day, I will put it right here in this way. When I go to the market, I won't get played by seeing an up close candle. For example, if I am bearish and I see an up close candle, what I noticed is I change my bias to bullish when I see a very powerful movement to the upside and it might be a retracement. So that's why if I have a daily bias, I don't put a check mark. I will put my daily bias right here. If I have a daily target, also I will put my daily target. Time, London session, New York session, hourly retracement, entry model. Same basic rules. Now, this is analysis needed. So these are some of the lines and marks that I need to put in my charts that will give me more idea and more confidence with my analysis. Now, this is what I changed in my checklist. And now I will go to my chart and analyze what happened during the last week and what led me to a 2% drawdown in my challenge account. So starting from a weekly standpoint, in the weekly basis, we were bearish during the month of August. We had right here equal lows, so this is a target. We have right here an order block as a target in the fair value gap. So, excuse me. So these are the things that are targets for me for the week that finished. Going into the daily chart, we have these two ideas right here, but when I go to the daily chart, I have another down close candle right here. So this down close candle is a target also, plus I have the daily lows as targets too. So now from a weekly standpoint and a daily standpoint, I have targets for the whole week. Now, what I just need to do is to have a daily bias in specific days that will give me the movement into these targets. Now, during Monday, we rallied to the upside. So my anticipation for Tuesday is to go into the 50% retracement area of this price leg right here, and we might see a bearish movement into this area. So what I did is I marked this high and this low, and I had this area right here. So this is the 50% retracement area of the daily chart because there is a swing high formation right here and a swing low formation right here. So we need to retrace into the 50%. Same analysis during the hourly chart. Now, if I go to the hourly chart, I have my kill zones marked. So what happened during this analysis is that I entered on the 1 hour break of structure. So what I did is I entered right there with my stop loss at around 8 pips, and I was targeting the previous day low and the previous 2 days low. So the idea was right, but the entry was wrong because there was the kill zone. So time was wrong. That's why I lost this trade. And why time is wrong? Because I was impatient. I wasn't disciplined to wait for my kill zone to enter. So this is a problem. Even if I see bearish momentum, I will wait for the New York session to give me a retracement into a PD array. So the idea is that I need to wait for my kill zones in order for me to have an entry. Now, if I go to my marks on my chart, there is things that I need to mark. First of all, I need to mark the previous 2 days highs and lows. So this is 2 day from Tuesday, so this Friday and Monday. This is one. I have this high right here, plus I have this low right here, and I have this high right there. Now, after we marked previous 2 days, there is the daily candle opening. So we have this open right here, and the opening is very important for me. Why? Because the opening is taken as an equilibrium idea. So if I am bearish for the day, I need to sell above equilibrium, which is above the daily opening. And if I wanna buy, I need to buy below equilibrium if I am bullish. So now I have the daily 50% retracement level. Now I need confluence from the hourly standpoint to see why it will start breaking to the upside. If I go to my left, I have this high right here, and I have these equal highs right there. So as you can see right here, I have the 50% retracement level. I have previous equal highs, so it's also liquidity. So there is a lot of confluence that will be a shift in market structure right here to the downside. So this is during Michael zone, during Tuesday. So the thing that needed to happen is I needed to wait for Michael zone to hit one of these areas, especially the 50% area, and then I want to see a shift in market structure on the 5 minutes. Now, a shift in market structure happens when a swing low is taken. So let me give you an example right here. First of all, if you see this fair value gap right here, it's being respected. If I want to take this up close candle right here, it's being respected. So since it's being respected and there is a swing formation right here, after the break of this swing formation, there is a high probability that we are going to keep going bearish. So the idea is to enter at this swing point, my stop loss above a swing point, and I am targeting previous day's lows. So my first target is this low right here, previous day, and my second target is this low right here. Although I had equal lows as a target for me, but my targets are previous days lows and highs. So as you can see right there, it would have been a decent trade taken and it would have been a winning trade. So the problem was not in my strategy. The problem was not in my analysis. The only problem that I have right now is impatience. So I need the discipline to wait for my kill zones in order for me to have an entry uh, to ride it into my targets. Now, that's why I marked, I put an indicator to mark my daily open and to mark out my kill zones. In this way, if I don't see this forming, okay, so if I don't see this color forming, I cannot enter a trade, and this color right here forming, I cannot enter any trades during any other kill zones. So in this way, I will have more ideas to keep me disciplined. Okay, so I'm trying to mark out everything that I need on the chart in order for me to keep myself disciplined. So if you see this type of analysis, it's very important for me because it keeps me disciplined. Now, since there was a big movement during this day around 100 pips, so if I take the highs and the lows around 100 pips, so we might see a consolidation during the next day or we might see choppiness. So that's why I didn't trade during Wednesday. Now, I had these as targets too. So in Thursday, I was bearish into this idea. Plus, there is unemployment claims on Thursday, so it's very beautiful day to have an opportunity to take a trade. Now, if I want to make the same analysis for this trading day, okay, on Thursday, same targets. This target is taken. Okay, so we moved up and down, and we moved around 20 pips below this target. So this target is taken. Now, I want to emphasize on something. If I take this price lag right here, you can see that we didn't have a retracement into the 50% area. So I cannot take this price lag as my new high to low because there was no retracement during this price lag. So my high is still this high and my low is this new low right here because we did not retrace into the 50% area during this consolidation. So there is a high probability that this high is will keep intact, but this high will act as a liquidity for us to grab it and then push to the downside. Now, since I had this levels, now I am on Thursday, I need to mark previous 2 days highs and lows, opening, and we have also the mark of the fibs. Now, let's start by marking, this is previous 2 days highs and lows, so this is in blue, and we have this high right here, then we have this low, red, and we have this high right here. Now, I have the opening of the daily candle, and now also I have the 50% area right here, it's times 4 in black. Also, I have this is the optimal trade entry idea right here between 62 and 79%. So I mark all my fibs like this. So this is my day. I have highs and lows. I have the fibs and I have the daily open. Now, if I wanna see what's happening right here during the London session, I have a retracement above the 50% area of this movement right here. I have this high as a liquidity grabbed, and I have this Asian high grabbed, and I am above the daily open. So I am in a premium. There is a high probability that we need to go into a discount. So the idea is that we are in a deep premium right here. We have a lot of liquidity to grab, and so there is a high probability that we will start pushing to the downside. Going into the 5-minute chart right here. So if you can see, there is shift in market structure, but it's before 2 a.m. So there is no way that I can take this trade, even though it might be a right trade. But what I need to see shift in market structure or break of structure to the downside at 2 a.m. So this is at 2 a.m. We can see that we rallied into an order block and a fair value gap right here and into this down close candle. So we ticked this down close candle and then we pushed to the downside. there is no entry right here because this swing low did not break. Then this candle breaks the swing low. This is my entry right there. My stop loss is above the swing point. And where are my targets? Now, my last target is at this low right here. So this is Wednesday's low. This is my last target for the day. As you can see, we did not hit the target, so I would have closed my trading at 6, so at 16, so it would be at 4 p.m. when the session closes, but I would have taken partials where at the previous 2 days low. So this is a partial area. So I would have taken partials at this area, and I would have kept my whole position into the next target or into the close of the session. So as you can see, also it would have been a decent trade. Now, why did I lose this trade? What happened is that we went into this up close candle right here and these two consecutive down close candles, and I wasn't marking all these on my charts. So the idea was that I shifted my bias into bullishness, not into bearishness, although I had this target to move 20 pips below it and this target to move 10 to 20 pips below it. So if I want to take, for example, this target, you can see that we moved 10 to 20 pips below the target. So what happened right here is I tried to take this long idea right there, and I did not wait to see the reaction from this fair value gap during my kill zone. So if I missed the opportunity to enter during London session, because when I was watching the ICT concept of high probability scalping, he tells you that you need to see, for example, if I am bearish, I need to see bearishness during London session. This will give me confirmation that the day will be bearish, okay? And then you need to wait for retracement during the New York kill zone in order to have an entry. So if I wanna have a better confluence going into my daily bias, I can wait for London to give me momentum, and New York will be the continuation into the targets. But if during London we hit the targets, there is a high probability that New York will be reversed. But an idea is that New York also moves with the daily bias, but there is a probability that London session will be a retracement. So what I mean by this is that London session, for example, might be bullishness into a PD array, then we see reversal during London session, okay, during New York session. Sorry, but if I needed to have another entry, I could have taken an entry during the New York session. If I waited for, first of all, this candle does not have a low wick, so there is a high probability that we will form a wick, for example, right here, to take this wick right there. So what I needed to wait retracement into the hourly fair value gap right here, and then I could have waited, for example, for shift in market structure, as you can see right here, and my stop loss above the swing, and also targeting this low and targeting this low. It wouldn't have been a very high risk reward ratio, but it's very decent, okay? So even a 1-to-1 risk reward ratio is very high for me. I will not be focusing on my risk reward ratio more than the process that I need to enter the market, okay? So this is what I will be focusing on. So there is a lot of opportunities for me to take a trade, but I need to be patient. And now, since I am marking everything in front of me, I will have an idea where to enter and how to enter. Now, if you go into Friday's session, if I want to take this swing high into this swing low, because this is the leg movement to the downside. During 10 a.m., there was news. So, as you can see right here, during London session, we moved around 10 to 20 pips below the target. So there is a high probability that we start to retrace. During 10 a.m., we hit the optimal trade entry right there. Okay, so even if you take it on a very high time frame, you can see that you can make 1-to-2 risk to reward ratio. But if I want to go to the 5 minute, usually I don't trade Fridays, but I can have confluence, okay, on Fridays. So I need to mark previous 2 days highs and lows. I need to mark the opening. So if I want to sell short, I want to sell above the opening, so I need to be in a premium. So as you can see right here, we have this high swept, okay, we have this powerful up close candle broken right here. So this is an entry. My stop loss should be above this high, but very high stop loss, so I could have put it right there, and I can target these proportion blocks or this low right here to the tick. Okay, so you need to close it manually. I would have made 1-to-1 risk reward ratio. Okay, it's not decent because usually when there is a very powerful move during the week, Friday will be choppy. Okay, so I have a lot of ideas right now. I'm trying to implement them in front of me on the charts. In this way, I will have a lot of confidence going into the market, and I need confluence. I need to wait for everything to align together in order for me to have an entry. Now, if I want to take a trade during the hourly chart. So when we swept liquidity, we shifted market structure. This is a swing low taken. You could have entered right there with your stop loss above this area, or you could have waited for a retracement for this down close candle, up close candle, sorry. This is an order block right here into a fair value gap. So this is also another type of entry. This is on the hourly chart. First target right here, second target down there. Also a decent risk to reward ratio. So the entry is not the problem. My problem is time and confidence going into the market and having an idea and not playing, not having wrong confluence that will give me a wrong idea about my bias. Okay, so now when I mark everything and also when I mark my daily open, my equilibrium, there is a high probability I know that I need to sell above it and to buy below it. Okay, so also Fibs helps me. This is very important 50% because if we are above 50%, we are in a premium for this price lag. So we could sell above the 50% and we could buy below 50% if we are bullish. Also, we swept liquidity. So there was a lot of confluence for me to enter a trade right here. So what I saw is that this candle was closing bullish on 1 a.m. So I I thought that London session would be a retracement into this area and New York session would be the extension to the downside, but I didn't wait. I wasn't in front of the charts, and actually, even though I lost a trade, but this loss made me take these decisions to mark out these ideas on my chart. So when I was watching the charts, I didn't have anything marked out. Okay, and I didn't know how to put everything together. So right now, I'm grateful that I lost 2% because it gave me the mindset that I don't know enough and I will never know enough about the market. So I need a mentor. And usually, what in the recent days, who I was watching ICT. So that's why I kept watching ICT, even if it's a very, very old videos. They will give me more confirmation because I am very comfortable trading his ideas. Okay, so if you are disciplined, you can have any type of strategy. For example, on the hourly chart, there is a lot of people that put this area as a support, as a resistance, and as you can see, it's a resistance. There is no up close candle that closed above this area, so it's a resistance. You can see right here, we pushed one more time into this resistance, then we broke this low. So there is a lot of people that take a trade like this, okay, and they wanna search for the next support area. For example, right here we have support, so they take cautions right here, and the next support is this low, so they keep it running into this low. So there is a lot of strategies, there is a lot of ideas, support and resistance, supply and demand, and there is ICT strategies also. So I am combining ICT strategies and ICT daily bias framing into my ideas right here. Judah swing, for example, I also learned from ICT. Judah swing, liquidity sweep from ICT, targets from ICT, how to use FIB from ICT. Everything that I learned is from ICT. Okay, so I started by learning the basics. What is an up close candle? What is a down close candle? How it forms? What is a break of structure? What is a change of character? So what is a supply? What is a demand? What is a resistance? What is a support? So I started with this basic ideas, how to see it on the charts. Then I went and learned that first of all, I started with the 2022 ICT mentorship model. I had a lot of problems for the daily bias, so I started watching the daily bias from ICT also, and there is students for ICT that make also videos about daily bias. I also watch them, so I have a very high knowledge on the daily bias because this is the first important rule in my strategy that will give me the opportunity to watch the charts. So if I don't have a daily bias, I cannot sit in front of the charts. I can do nothing. I will not know if I am going bullish or bearish. So there is no idea to frame a position or a trade about. So that's why I worked a lot on my daily bias, which was very important. And now I see that most of the times, not all the times, but most of the times, I have my daily bias right. Okay, so hopefully next week I will be working on my discipline, and since I am marking out everything on my chart, there is a very high probability that I will be disciplined. So hopefully next week I will start to see positive results going into the market. I know this video is very long and there is a lot of ideas in it, but it's very important for me to record this video because when I talk, when I try to teach, I have more grasp of the knowledge and how to implement it. So my idea from recording videos is just not just to give you information on YouTube, okay, or educate you on YouTube because I'm not profitable and I'm not seeing results yet. But the idea from recording this video is when I need something to go back to, I can go back to these videos, and also when I try to explain for you how my strategy works, I will have a better knowledge and a better grasp of this strategy and of this idea. So that's why that my purpose from recording videos is for my own benefit. Okay, so it's very important for me because when I teach, I have a better grasp of the knowledge and I can implement it and see where it went wrong and where it went right. So if you see this video, and think that's beneficial for you, please don't forget to like and subscribe, and see you in the next one.